Hello, this is Brian Shannon from AlphaTrend's Blogspot. It is Monday, the 29th of October, 2007. The market's closed. S&P 500 finished with a gain of 41 cents. I've been saying lately that I think it's more of a stock picker's environment in here, but this rally keeps on continuing here. It's right up to the 20-day moving average now, and we are again at an area where there might be the potential for some resistance. What we want to do here, I think, is probably take a look at some Fibonacci and say from this high on the 10th to the intraday lows that we saw last week, we have retraced a little more than two-thirds of that move. So from this high of about 157.5 down to 148, we have seen two-thirds retracement. A lot of times that's where we do tend to find a little bit of selling pressure or just a lack of demand. And it is, again, getting extended here with a lighter volume that this rally's been occurring on. So it just means keep your attention high, basically. Like I said on Friday, though, that the we do have a rising 5-day moving average. The market broke past resistance, pulled back, and then rallied, and here we had a continuation of that today. But it seemed just kind of tired. And like I said, it is a stock picker's environment, and hopefully some of you got involved in some of those Chinese plays that I had mentioned over the weekend in that video, because I had a fantastic day with them, and I hope you guys did too. But as far as support goes, I was talking about 150, 175. That's these lows right here. That's where we do find that 5-day moving averages now. I think that basically this level here at about 153.5 is going to be important, as it was Friday's highs and then the lows today as well. So if we get a move below 153.5 tomorrow, I think maybe you want to become a little bit more defensive. But again, just some fantastic moves in the individual stocks. This MACD divergence, I just want to point it out one more time, just in case you hadn't heard me go back about 3 days and look at that video with the MACD divergence. The semiconductors, we had thought that they might be finding some support near that 450 level. In fact, we're getting a little bit of a bounce here. Like I said on Friday, though, I wouldn't be looking to buy this thing. But if you were a buyer, that probably the level to buy would be, actually I think it was above this level right here that I was talking about for a short-term trade, up to where I thought it might find some resistance was 460, and that's where that declining 5-day moving average as well. I do expect that this attempt at a rally in the semiconductors will fail to hold. Perhaps it gets up a little bit higher, maybe up towards 475 or so, but there's so many good stocks and uptrends. Why waste your time trying to pick a bottom in a non-performing group? It just doesn't make any sense at all. Let's take a look at the IWM. The Russell 2000 continues to bounce as well. We also see in this market that volume is diminishing as the trend becomes a little bit more mature. That again just means to keep your defense level high. Looking at Fibonacci here from the highs of the 10th or 11th, whatever that is, to the intraday lows, we did come up and tag that 61.8% retracement level here right near the open, and this market actually closed with a loss of 10 cents. You can see it gapped up right to there, and then it just kind of went sideways all day today. Looks like this level here, 81.40 or so, will continue to be a level of importance going forward. That's again where we broke past 81.40, 81.50. That's the resistance level we broke past last week. Getting below there and staying below there for a half hour or so, I would think that we're probably due for a test of the 5-day moving average. If that fails to hold, then look for that 80.5 level, and it continues to be an important level here on the daily time frame as well. Remember, this is where we have the rising 50 and the 200-day moving average. Now, don't look at this as a bullish or golden cross. As I pointed out, the last cross we had of the 50 and the 200-day moving average was back here, and this is supposedly a bearish signal when the 50-day or the 10-week moving average crosses through the 200-day moving average. At that point, I was very skeptical that it meant lower stock prices, and we've actually seen a very nice rally unfold since then. So don't put too much faith in that 50 and 200-day moving average. They're much longer term than what I focus on here on this blog. So the market is kind of just turning sideways in here. We do have, again, we continue to have mixed signals across multiple time frames. That's why I still think you've got to continue to just focus on the individual stocks. We are starting to see a slowdown in the release of earnings reports as far as the number of companies each day. Most important one I'm going to watch today after the close is from Sohu. That could be important for some of those Chinese stocks, as it is really it had been for years one of the leaders and had a great day today. It looks like the people are really expecting a lot from this company, and maybe it can deliver, but it's definitely way too far extended for my taste. I like the ones like I showed over this weekend, as far as just looking at lower risk levels to enter. The Qs did have a higher day today. They closed up 23 cents. So that's about a 0.5%. And it just continues to kind of grind higher in here. It doesn't really look like much, but it's a fantastic uptrend on the daily time frame. We are up at this upper end of where this market has been. It's just kind of not really making much progress. It's not going down either, though, but it's just kind of churning up here on lighter volume, so maybe it's sucking in the shorts. You never want to sell short a dull market. The primary trend is higher, so you want to continue to give the benefit of the doubt to the buyers.